And the reason I have a big smile on my face is because it's been 2 years since we had any major venture-backed IPO. So while it's not what everyone was expecting, I think they did a phenomenal job squeezing this in the middle of a very tumultuous market. And the reason they did it is there are a few reasons. And one of the reasons was the employees, giving them some liquidity. But also you have to remember, this will be the most expensive capital that they'll probably ever raise going forward. And they know that the cost of capital falls off a cliff after this. So to be able to tap the capital markets, whether it's debt, preferreds, or stock at, this price going forward, I think is going to be one of the cheapest things that they'll do. That's first and foremost. But secondly, you have to remember the cost basis for the cap table, the majority of them is at a fraction of where the current stock price is. So these investors have been in this business in some cases for up to 13 years. So as you know, most VC funds are 10-year funds, and then they have extensions, and they want liquidity events after 10 years for their shareholders. So even though it's not a huge coup for the IPO investors, it is definitely a great return for the early investors who got into this transaction. And then last but not least, they probably let some of the IPO investors take some chips off the table after it popped immediately, which will probably explain a little bit of the softening of the stock after it started to trade a little bit. So if you ask why now, I think Instacart is playing chess here while everyone else is playing checkers.
Yeah, that's a good analogy. But what does this really mean for the IPO market? Do you think more stories, more startups, which are, decacorns, unicorns, will make their way to the market?
I don't think so. I think this was a Instacart story. I think ARM was a different situation. This is mostly about Instacart and the fact that this business has been around for 13 years and the shareholders wanted liquidity. They wanted some liquidity for the employees, and they've been talking about going public more than anyone else. And I think the timing is right. Remember, you have to basically pull an Ocean's 11 to do an IPO in this market anyway. So they had to time it when the financials were right, and they sacrificed their growth rate to show very profitable quarters. So they did all of these things and they planned in advance. I don't think everybody can do this. I don't think everyone's running is profitable. I don't think everyone has this amount of cash on their balance sheet. And I also don't think that all of the other investors are as long in the tooth as the Instacart investors were. So look, they gave investors everything that they wanted. They gave you a profitable business in every metric, a high relative growth rate compared to public companies, and they even priced this thing relatively cheap. So I think they did their part. I don't think it has long-term implications for the greater market.